Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing technical analysis, reoccurring shapes and patterns, part 1 of 2. When trading from charts, one often finds that certain shapes and patterns reoccur time after time. This is because the Forex market, just like any other financial market, tend to retrace price action. In fact, over 80% of movement in price action within the Forex market is price action retracing. Some pattern formations in price action, such as price seemingly complying to moving averages, MACD, and stochastics for example, are very self-evident. However, we know that price action does not move in a straight line, and therefore we need to be looking elsewhere for help in determining the possible future direction in price action movement. Some patterns and shapes are somewhat subjective, but nonetheless, when a trader realizes that these patterns and shapes which reoccur over time exist, it will help add another dimension in the art of Forex trading. Let's take a look at example A, which is a 1-hour chart of the USD-JPY pair. Picking up the price action from the left-hand side of the screen, we can see that after an initial push higher, the volatility slows down. The pair's move takes on a more gradual move higher, and we can see the price appearing to arc through the 90 degrees to the right. We then find a slight pullback lower where there seems to be a wave encompassing the price action as it moves higher. Other examples have been added and which, on a subjective basis, might show further waves and arches acting as makeshift support and resistance areas. Now let's take a look at example B, which is a 4-hour chart of the GBP-USD pair. This time the shapes are slightly less objective and we can see examples of triangular formations. They tend to form when there is a spike in price action in either direction, and where the price action fades back to the original levels of the spike, and where the base of the triangle is often on the area of support and resistance. Example C is a 4-hour chart of the CAD-JPY pair. This is a site that you may be more familiar with, the box or square. To conform, there must be at least two similar exchange rate levels of support, and two similar levels of exchange rate levels acting as areas of resistance. The longer that price action is contained in boxes, the more likely a volatile breakout will occur at some point. In example D, we stick with the 4-hour chart of the CAD-JPY pair, and this time we have added tracks. These are simple moving averages acting as areas of support and resistance to price action. Traders often draw these tracks on their charts and look for areas where price action breaks out of the tracks. They do this to try to determine future price direction. Look out for more shapes and patterns in part 2. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.